Well, it's been a rough couple of weeks for the market, which is obviously more vulnerable now than it's been in months. On this solemn day for the nation, the stock market itself has to pass a big test. But, but the situation is the S&P 500, it's got to hold above that 50-day moving average. Now, I will say technical analysis is not an exact science, so a slight slip below is forgivable. But when it does hold, historically, it revives these sagging rallies and we get a big move to the upside. The question, of course, is what would the next leg on the upside look like? Will investors seek out the same names that obviously before got too close to the sun, or is it time to find new opportunities? Let's ask Rob Luna, CEO of Surevest, a CI financial company. And on the phone with us, Capital Wealth Planning Chief, Jeff Saut. Rob, let me just go with you. First, let me just start at the gate here with you. Listen, we started pulling back last week. You had a couple of rally attempts this week, all sort of half-hearted, and it feels like the market is sort of grappling here. We know the names, the sectors that are winning, even today, they're not big enough to carry the entire load, right? So materials are up, industrials are up. That's fine, but they don't have to kind of wait to these indices, these major indices that the names that are coming down do.
Yeah, no, that's right, Charles. Not only do they not have the weights, but they don't have the top-line growth to get investors excited enough to continue to bid those names up. So, I think going forward, it's really going to be a replay of what we've been seeing, Charles. It's going to be the stay-at-home names. It's going to be the names, actually. We've been talking about this bifurcated economy, the haves and have-nots. Look what continues to do well. Restoration Hardware, higher-end demographic, Peloton, blowing the numbers out the door today. I think you got to stick with those names that are really gravitated towards the consumer, that's doing well, and also are able to provide that top-line growth. Use this opportunity to look at those names like Zoom, DocuSign that you might have missed the boat on, because a year, 2, 3 years from now, those are the names that are going to be leading this market.
And at this moment, though, they are having a lot of trouble sustaining upside moves. Peloton was up like 11, 12 bucks. Now it's down to $3. I want to bring in Jeff as well. Hey, Jeff, of course, we know you believe that there's a long-term secular bull market going on, but you also note, you always remind us that there will be pullbacks from time to time. If this is one of those times, then how much downside should we expect?
Well, our short-term proprietary model flashed a sell signal 3.5, 4 weeks ago. We wrote about it, told people to raise a little cash, weed out some of their weaker holdings. How low it goes, Charles, is unknowable. I just hope that we're able to identify it. I will tell you that when you get markets like we've seen the past 3 or 4 days where they go up big, they come back down big, they go up, down, they're trying to form a bottom. Whether that's the case here or not, we'll see in another week or two.
All right, well, Rob just talked about some of these winners, these stay-at-home winners. We also call them momentum darlings. They've done extraordinarily well, but they're down hard, Jeff, in the last couple of days, right? And it feels like many of them are reconstituting their buy thesis. Take, for instance, Tesla. Tesla now, we're being told, hey, take a look at this thing. On September 22nd, they've got the battery day that's going to be phenomenal. Even one of the firms on Wall Street that's not a fan doubled their share price target today. So, is it one of these things also where these names that have been big winners need to sort of give us another reason or a new reason to stay long?
I don't think so. I think the players will go back to the same girls they danced with in the first leg of the secular bull market. We went from 666 on the S&P 500 to roughly 3,300. I think that was the first leg. Secular bull markets usually have 3 legs. The second leg is usually stronger and longer than the first leg. If we started the second leg in March at around 2,300 on the S&P, on a measured move, you could go to 5,000 in the second leg before you get another decent pullback, and then you start the third leg or speculative leg.
All right, well, you had me at 5,000. Rob, on the S&P, I'll take that for now, especially today. Rob, though, you take a company like Tesla, right? Also, there's a report out that probably will start to export those Model 3 cars that they make in Shanghai over to Asia and Europe. So now you start to have a fundamental story that surrounds this sort of momentum story. I mean, you already talked about these stay-at-home names, extraordinarily volatile, having trouble holding on to rallies right now. Do you need to sort of see that they have to be augmented, though, by credibility, right? These extra news stories.
Yeah, no, I mean, in the long term, Charles, fundamentals always win out. But, look, we've talked about this secular change in this economy. I mean, stay at home just being part of it. And I think the longer and longer this goes, consumer psyche starts to change. You know, my girlfriend just talked to me to do a cooking class online on Zoom yesterday. Very hesitated, did it. I walked away a believer, Charles. It was the greatest thing ever. I think that's going to be changing things, you know, quite extensively. And so I think those companies are really changing the way we do business. We talked about corporations increasing their bottom line by reducing travel, all these other things. Charles,
right.
These are new companies that you have to stick with regardless of the volatility.
Well, Jeff and I won't hold that against you. But, gentlemen, we have to leave it short today, unfortunately. We got some news coming up soon. Thank you both very much. Your wisdom, no matter how short it is, always helps the audience, and I appreciate it.